Z seeing a rise in full-year profit. We'll tell you why. This is Bloomberg.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people. Hi, good morning. This is Bloomberg Quint Live, and I'm Menaka Doshi.
And I'm Neeraj Shah, and you're watching Indian Open. Good morning, Menka. Good morning, Ira.
Good morning, and these are our headlines this morning. It's a cautious day of trade in Asia as earnings and the ECB's meeting takes center stage. HUL reports a 4% growth in volumes in the quarter gone by. The country's largest FMCG firm sees its profit expand by the most in 10 quarters. Yes Bank will be one of the key earnings to watch today as the private sector lender gives an update on its asset quality.
Well, and here's the trade setup for the day. Guys, can you imagine I missed such a day of anchoring yesterday with the banks doing what they did.
Such deep regret, is it?
Such deep regret. Never, I mean, when have I?
I can tell you that Ira was watching them very, very closely yesterday. So
yeah, everybody was. But yeah, when do you see stocks move the way they did, at least in the PSU banking counters yesterday? So yeah, I mean, frankly, it was a day all about PSU banks. A mix of sharp short covering. Remember, it's expiry as well. Some cash buying, and there's significant cash buying. We'll come to that as well. Took the bank nifty higher and could well have the strength to take it slightly higher in today's session as well. We'll talk about that in a bit. I think what will be monitored will be the lack of private banking participation, even NBFCs, all of which would correct at 3, 4, 5%. The likes of HDFC, Bajaj Finance, Indiabulls Housing Finance, all of these stocks corrected in a big way. So the lack of private banking and private NBFC participation to be monitored. I think the sentiment has improved on the consumption pocket as well. So aside of PSU banks, consumption stocks could well have a field day. We've seen Asian Paints do quite well on its quarter. HUL numbers, and we'll talk about that in detail, could well add a further fillip to this space. But without too much ado about what the indices will do, I mean, we know it's all about PSU Banks to an extent consumption today. I think key stocks to watch in today's session, a lot of stocks which will react today. So strong results for both RBL Bank, PNB Housing Finance, just that because they are in the financial space, you don't quite want to go out and figure and mention as to what they're likely to do. But yeah, the results were good, so they'll be monitored. I think Exide could well react negatively. A lot of promise, but I think the commodity price uptick and otherwise led to a very, very subpar operational performance. Let's wait and watch if this one tends to correct a bit. Remember, a lot of these battery makers too had a bit of a fillip the last a month and a half, both Amara Raja and Exide. Let's see if there's a bit of a reaction to these numbers in today's session. The management typically doesn't give commentary, but it'll be interesting to see if indeed they say this is one-off or will they be able to manage it over the course of the next couple of quarters. People are after all bothered about what happens to the yearly margins and not really just one quarter. M&M Financial, one more sour quarter. Don't quite know whether the market will be too enthused by this and whether there's a further correction out there after the 2.5% downtick. So do watch out for these. And aside of results reactions, a story on BloombergQuint.com that you can see as well, the anti-dumping duty on cold roll flat products, which is levied by India on Chinese and some other countries' products as well. And that could well have a bearing on companies like Jindal Stainless, Hissar and Jindal Stainless. This one was a recommendation on the Moorer trading session. The stock has done well the last 2 or 3 sessions. Let's see if indeed there is some positives for this one in the session today. So aside of results and PSU Banks and maybe HUL, this was a set of stocks that I thought could be interesting for trade today.
Yeah, well, I think we're going to continue your conversation on PSU Banks and how they fare in trade today. If that's at all predictable, that's coming up on First Word. So if Wednesday was the best day ever for the Nifty PSU Bank Index, today may not be very different, and Neeraj will tell you why. We also take a closer look at Hindustan Unilever's second quarter numbers, especially that volume growth. Then here's a reminder, the ECB will announce its exit route from quantitative easing later this evening. At least that's what's expected. We'll quickly analyze what that means for the global economy, currencies, and all of that. And then finally, Battleground Gujarat, decoded by none other than Sanjay Pugalia. You want to make sure you stay tuned for that. So we've got all of that coming up over the next 20 minutes or so. But let's come back to that conversation we were having on PSU Banks, and what you make of whether you think the rally can continue today. Definitely not at the 40-50% levels, for PNB as we saw yesterday, but what at least the internals of the market are telling you.
Yeah, so I was speaking to Ira before the show as well, and I was asking her what she thought, and she was like, yeah, don't think that it'll be in the same vein. I said, yeah, I agree completely. It won't be in the same vein for sure. You can't have that. But, I'm sure you guys talked about the fundamentals all day yesterday. What I'm trying to do out here is give you feedback from what market participants think should happen over the course of the next few days, not really just pure play fundamentals. But I spoke to 3 fund managers, 2 dealer desks, sales side, and all of them said that they actually received buy orders. The stock started off higher, but they received buy orders, some of them reluctant buy orders, after the stocks like SBI, etc., had moved up 20%. So people were caught unawares. Fund managers, and 2 of them that I spoke to said that we made an exception. We went into the dealing room and placed orders for a State Bank of India and some of the stocks much higher than what we would have wanted to, because we believe that this rally is sustainable. A reference point in how the sentiment was also that some of the bond prices, I think Ira, and we were talking about it, went up in trade yesterday as well. So the sentiment by and large seems to have changed, at least in the market participant mood in dealing room. And remember, these stocks are under-owned. Now, one key thing, and the fund flow stands testimony to that yesterday. I was surprised when I first saw the numbers, but then FI cash numbers were higher. DI actual cash numbers were negative 156 crores. And I was talking to some of these guys, the PSU fund managers, and they said, frankly, we didn't have cash. We sold things in order to buy PSU banks. That's how bullish we have turned for the short term on PSU banks, because we think that the cycle could finally be turning. This is that one meaningful recap. That the one meaningful move is what they said that the government has done. And this is actually a consensus view from 3 guys. Now, I was looking at the trading patterns yesterday, guys. State Bank of India, PNB, BOB, the 3 large ones, volumes were about 3 times the 10-day average. And on these volumes, the delivery percentages were about 50-odd%. So there was some cash market buying corroborated. The data corroborates what the fund managers were saying as well. So this was one more thing. And yeah, you could argue that there were some technical factors, because all 3 large banks had a bout of short covering. A lot of shorts which were there in the system got cleaned. So there was some bit of technical buying as well in addition to cash buying. Whether that continues today, I think that's the interesting one. But Ira, here's where maybe you or Menka, you would have some thoughts as well. But these 2 guys that I spoke to on the fund side, and no, not the dealing side really, just the fund side. They said that to their mind, 1.5 times price to adjusted book for a State Bank of India, adjusted for SBI Life, etc., is not expensive valuation. It's probably average cycle valuation, at least their thoughts. Now, I don't know where you stand here.
Yeah, so if you look at the price to book values, and this is something that one banker had pointed out to me, so SBI was always, close to book. So it closed off at about 1.17 times price to book. But the PNBs, the BOBs, the BOIs, the Central Bank of India, which is the large banks, ex-SBI, had all been trading well below book value. Now, it was fair for them to trade well below book value before the cleanup had happened, because nobody believed in the quality of the book. But post the cleanup, I think there was an argument out there that why should they be trading at such a discount to book value? They should be closer to one-time book at least. And after yesterday's rally, I think most of them are now close to one-time book. PNB is at about 0.98, BOB is above 1, BOI is at 1.3 times book, Central Bank at almost 1. The smaller guys are still at, so Union Bank is 0.5 times book, IDBI is still 0.5 times books. So I think at one-time book, you've already seen some of the fundamentals return to the market, right? I mean, so you are saying that, okay, this is now believable. From here on, I don't understand markets as well as you do, but I think the bet should be on how much of this capital can then be used to recover the growth in these banks, and how much can be used to recover the market share. Some of it will obviously go towards provisioning. That will be the first priority, the provisioning, the cleaning up of books. But then from there on, it becomes about who can capture the growth in the market and who can get back the market share. And that's where probably the difference between the larger banks and the smaller banks will come.
Yeah, so all of these guys said that they are not looking at the lower end. They are really not looking at the Bank of Maharashtra and the others. For that matter, even companies like IDBI Bank. They are all focused on 3, maybe 4. SBI, BOB, to an extent the CAN banks of the world.
But we've had 2 indications that the money might go, in fact, to stronger banks, right? I think in both Arvind Subramaniam mentioned that,
and if I can,
Rajiv Kumar mentioned that in conversation with Tamanna last night, that this will go to the banks that can make the best use of this money, that have already done the cleaning up. So typically that would be the top end of the banks, right? And a lot of whether this will continue or not in terms of a stock market rally is also on the rebalancing of portfolios bit. How much more do you need to rebalance to in some fashion equalize your, not equalize, but to balance out your exposure to private banks and NBFCs, which is extraordinarily high, and PSUs, which is extraordinarily low. And now you've got to find some midway ground.
Yeah, because you don't want to go over on financials. I mean, 30-35%.
Exactly.
Stick
so
to that.
What that midway ground is, again, will depend from fund manager to fund manager, investor to investor. But that rebalancing, I'm sure, could not have happened in one day. Many people would have stepped back and said, today is the euphoria day. I'll wait for 3-4 days for this to slowly, sort of sink in and see if I can buy at different prices or things like that. So we may see this sort of continue, you think, for the next few days. So bits and pieces.
One technical rallies could take maybe the stocks here and there a bit over the next 2 or 3 sessions. Its expiry date could be very interesting. But 2 large, 1 mid-size or 1 small-size fund manager, 3 people that I spoke to yesterday, they believe that while they've bought a share and they've only looked at the large banks, they have not gone down to the small banks. I don't know if some of the other guys did it or no, but the guys that I spoke to, they've only looked at the large ones. But they believe that there is cause for some sustainable rally. And as I said, 2 out of the 3 mentioned that they didn't have cash to deploy into PSU banks. They sold something and they bought into PSU banks.
It comes down to the quantum of the money that's being put in. It's a large sum.
Yes.
And I think, we pointed this out yesterday. Bloomberg News did a story as well saying that this is more than they have infused in 10 years. That money has to go somewhere. And you were asking about, the provisioning, or talking about the provisioning, the gap. I think as the numbers stand industry-wide, you're at about 40% provisioning. There was a 6 lakh crore, gap. You have to go to 60%, so at least that gap gets covered. But I think, those comments coming in from Rajiv Kumar in particular are very specific. So let's see how they actually divvy this up, what conditions get attached to it. The smaller guys...
But effectively, you're also taking a little bit of a long punt on the recovery for credit demand in the economy also, right? I mean, yes, of course, this will dramatic. The first step is putting in place regulatory capital, as Zira's been talking about since yesterday, cleaning up the books, allowing for the banks to
have capital.
Yeah, so to get over this horrible period that they've been going through, right, for the last few years. But the second step really is the punt on when credit demand will return to the economy and how long that will take and who it will go to.
Roads.
Roads, yeah. You know, it's interesting. The second piece to that, and I can't remember which report, because since yesterday there's been a ton of coverage on this. One of the reports said that does this enable these banks then to start putting money into the new road construction contracts that the government hopes to give out? Because it's not just roads, to be fair. They've also announced, you know, and I know everybody takes this with a pinch of salt, but a bunch of economic corridors that they want to develop, etc. Right? So this is a construction and development activity that goes just beyond a few road contracts or a few road companies. Roads, highways, economic corridors. So then do these banks all become more capable of being able to lend to those sectors? Of course, we may all have our own, you know, doubts on whether how many of the companies in these sectors are deserving of any fresh credit or not, and that's a whole different question. But that's a different.
But that's a valid question, because if they again go and lend to the people and the kind of projects which were not bankable, then you'll be back to square one in
but many of those projects
years.
were not bankable also because the government, you know, structures were poor, and I think that, you know, we've recognized over the last few years, PPP structures and all didn't work out. So, anyways. To cut a long story short, you're saying essentially that you expect, based on all the conversations, that this rally will continue
over a 2.5 month period, unless something changes globally. Most people believe the stocks are slated to be quite high from where they are right now.
All right, guys, we're going to move away from banking just for a wee bit to the consumer space. Hindustan Unilever delivered a strong set of second quarter numbers yesterday, surpassing analyst estimates on all counts. And Agam is here to summarize the quarter for you. Now, Agam, I think the standout thing this quarter was volume growth, wasn't it?
It was, Menaka. And, you know, I want to talk about the return of two of its largest brands, that is Lux and Wheel, which has shown double-digit growth for the first time in 2 to 3 years, according to analysts. And that is the reason why we're looking at a lot of strength coming back for HUL this quarter. Of course, its other brands like Dove and Surf have also continued to do well. But moving in, you also have a lot of brands which are in the works for HUL, which could spur growth as we move into the next couple of quarters, namely Ayush toothpaste as well as soap. And they're working on a lot of innovation in terms of some of the herbal brands as well. But they were a little more guarded on that one. But we will get a lot more news there. That said, you know, if you notice, the gross margins have expanded by as much as 300 basis points. And this is because of HUL's cost-saving initiatives. And that's worked out in their favor, and which is also the reason why we're looking at operational, you know, expansion in margins. But the real question is then, what does one do with HUL currently? In terms of valuations, it stands at around 54 times FY18 earnings. And this is a lot higher than the Nifty FMCG PE of around 41 times, and also a lot higher than HUL's owns, you know, a 5-year average of around 41 times. So it is expensive. Yet, as far as the Bloomberg consensus goes, well, you have about 57% of the analysts on the consensus rating a buy, but the price target is just about 1302, which leaves an upside of only 2.5% from current market levels. So it's for investors to decide as to what they want to do with HUL. But for now, it's a steady quarter, but not too much upside in terms of Bloomberg consensus ratings.
Yeah, very quick follow-up question, Agam, and a short answer to that. Any warning that they put out on increasing commodity costs or input costs?
Well, Menaka, as I just said, you know, they've actually seen a lot of stability in raw material costs, which is why they've seen an expansion in gross margins. Again, they usually refrain from giving an outlook on commodity costs, but for now,
Oswal has to say about the con call highlights, and one of the points that they made is that the company said input costs have started to inflate and the management expects further inflation in them. So I was just wondering whether they gave any more granular detail on that front.
Well, we'll have to just wait and watch on that one.
Fair enough. Yeah, they are a company that's cautious about commenting. Thanks, Agam, for that. ECB?
So we've got a big meeting coming up, big central bank meeting coming up later today. The European Central Bank will meet, and the general expectation is that President Mario Draghi will offer some sort of guidance on the pace of bond purchases from here on. Let's welcome in Jeff Lewis, Global Strategist at Capital Markets Group at Manulife Asset Management, for a sense of what markets are expecting. Jeff, very good morning to you. Thanks for taking the time. What is your own expectation of the numbers that may emerge in terms of asset purchases from here, the trajectory, and how soon you'll see it wind down?
The ECB is not going to be in a hurry. There's still a lot of excess capacity. Although the economic data in terms of PMIs, business and consumer sentiment is very strong. So I think what we'll see is a gradual start to the taper, and I think that's what the markets are expecting. If you look at CDS spreads across European bond markets, it would appear that the markets would have expected a reduction in tapering to around 40 billion euros per month. If you looked at the scarcity of bunds, you could justify something lower than that. But I don't think we'll see the ECB in a hurry. I think we'll see them engage in a mild taper. So I don't think that's going to have a huge impact on markets after the meeting. I think that's pretty much what the market is looking for.
So anywhere between 30 to 40 billion euro would be acceptable to the markets. But if you get, say, a 25 billion monthly purchase number, would that be seen as faster sort of taper down than what had been anticipated?
Yes, I think it would. I think if it was in a 2025 ballpark, then that would be seen that the ECB is giving more priority to concerns over the diminishing pool of eligible government bonds in certain areas, particularly the bond market.
Jeff, so now we are getting into a period, with the Fed unwinding exceptional monetary policy. We've got the ECB also going in that direction. The market seems fairly sanguine that this will all go through smoothly. I think, as the Fed has said, it will be like watching paint dry. You equally sanguine?
I think the Fed has explained its position fairly well, and it is such a very gradual unwinding. And given that most economists, most empirical research suggests that QE perhaps brought down long-term bond yields by 100 basis points, then we should get is maybe 70 basis points reversal over that over a number of years. But markets are very forward-looking. That they might telescope some of that expected forward impact, so we may see some of the increase front-loaded. But it's a gradual process. It's very well understood by the market participants, so per se it shouldn't be a cause of major spikes in market volatility or risk-off periods, but we could perhaps see those longer-term yields drifting up a little bit more rapidly than perhaps maybe the economic models would suggest.
There's been some upside, though, in the U.S. bond yields, Jeff. Still comfortable for you? Any sort of prognosis on where you think bond yields, the 10-year bond yield in the U.S. will settle?
Well, certainly the yields have been drifting up. They've done that a number of times before. Wouldn't be surprised now to see them moving up, particularly with what we expect will be a third Fed rate hike in the Fed funds rate. But I think that they're still going to be well south of 3% by year end, and that's probably the critical threshold, I think, before it starts to have impacts on equity markets and other risk assets.
All right, Jeff, thanks so much for taking the time to speak with us. That's Jeff Lewis there. So if you get a number anywhere between 30 to 40 billion in terms of monthly purchases, the market will be fine with it. If they come up with a lower number, 20 to 25, perhaps there'll be some repercussion.
Yeah, well, I think they've been expecting a halving of bond purchases.
From 60 to 30.
Curious to know whether that's all. So I suppose that's all baked in. Markets seem to be very calm. But we've learned that when these things actually do start, what it does to portfolios across the world is unpredictable. So both between the Fed and the ECB, considering this over a period of time, and at some point, I think even, I can't think of why the Bank of Japan will not start looking at how their economy is doing, which has been fairly well. Abe's win in the elections, the fact that, he's probably now here for the next 4 or 5 years, as reason to also start relooking at their book in any fashion. What was the number? I think 4 to 5 trillion, right, is what central banks had added on in the last 5 years, or was it more than that?
I don't remember the number that they've added on, but the U.S. central bank balance sheet is now more than $4 trillion. I just, as I was asking him, the U.S. 10-year bond yield is now at 2.4%. So, there is a slight inching up that's starting in the bond markets in terms of yields.
Yeah, in fact, you'll also see I think lots of commentators have been writing about the convergence, rather, the narrowing of the gap between the 2-year and the 10-year, and how all of that's playing out in the U.S. So, all right. We're going to move away from central banking for a bit and bring you battleground Gujarat. The stage is set. This time a lot is at stake. Well, every time a lot is at stake. It's going to be a two-phased election in Gujarat, which begins on the 9th of December. That's what the EC told us yesterday. And while the BJP quite obviously still has the upper hand, a resurgent Congress, or at least signs of it, and a defiant Hardik Patel, the party leader there, can pose or some people say can pose some serious threat to the BJP's 20-year rule in the state. Joining us for his prognosis on what's going to happen is Sanjay Pugalia. He's director at Quintillion Media, veteran political journalist. Sanjay, good morning. Thank you very much, for speaking to us this morning. What do you make of where we are right now in the battle for Gujarat? The last few weeks has been about the Modi government and the Rupani government announcing a series of measures, both at the central level and then at the state level. I think Indian Express counted it to be 20 measures, most of them directed towards regions like Saurashtra in an effort to placate the Patidars.
Same as we were talking about recapitalization bond. So political capital of Mr. Modi has to be recapitalized. That is why Election Commission delayed its announcement for the election. So a lot
I like how directly you can put it, right?
So the effort is to really restore the credibility of the BJP government after such a long incumbency in the state. The threat to BJP is not from Congress, actually. The threat is from the new trend of Dalit, OBC, and Thakur Patidar emergence. After a long time, Gujarat is seeing politics from the prism of caste instead of the prism of religion that it has been habituated for since last 3 decades, almost 3 decades. So that is the problem BJP is facing. Congress, if it puts up a good show, it will be only because of this upsurge which is being led by Hardik Patel, Jignesh Mewani and Alpesh Thakur.
What do you make of the numbers, Sanjay? I think we had the India Today poll that suggested that there'd be about, 48% vote share for the BJP projected, and that the Congress, it would come in somewhere between 38 to 40%. Waghela, Aam Aadmi Party could account for about 12% or so. What's your sort of take on the numbers?
Look, if there is a disappointment against BJP, some voters may vote for some other people other than the main opposition, which will, of course, be Congress-led opposition. Waghela and Kejriwal may get some votes. But if there is an anger against BJP, then all these votes won't really get divided, and they will go to one main opposition candidate who is in a position to defeat the BJP. So BJP is trying very hard, including NCP, that will also be fighting many seats in this election, that non-BJP vote should get divided. That effort is very serious. We do not know how it is going to actually play out. When you spoke about survey, look, there are 3 or 4 numbers we should have a quick look at. One CSDS poll gave around 150 seats to BJP, landslide because of the vote division. So the gap between the two-party vote share would be more than 20% for that kind of result, 150 seats. Means that BJP should get 60% vote share and Congress should get 30% vote share. That is absolutely unrealistic scenario, but who knows? The other polls are giving 115 to 130 seats to BJP. Betting market, which is just now picking up, and nobody has reported so far, which is my favorite parameter to always check, especially in Gujarat. So 105 seats for BJP is the best case scenario. Look, the number should be looked at from this point of view also, that from 2014 Lok Sabha election, when BJP got 57% votes, the fall is 11%. For Congress, the gain is 8%. What if that momentum continues? That will mean that the gap will be much narrow. All I'm trying to say, BJP will come back, but it is most difficult election for BJP. The kind of media narrative and the propaganda we are seeing is very different from the ground reality. There is a disappointment. There is a young, new demography in Gujarat which is becoming very assertive. How much that will get channelized into defeating BJP is the question, because BJP is, especially Amit Shah, Narendra Modi, election machine is super efficient compared to Congress, which is almost non-existent at the grassroots level. It is the voter that is keeping the party alive, not the party itself.
Yeah, I know there's over a month to go, so I'm sure we will see many more cards being played on the table here by the election machine, as you call it, of Modi. And I know Neeraj has a question, but I have a very, very quick one. And Sanjay, I think this is just to be able to, for us to get a sense of why this is so critical. So I think everybody believes that the BJP will come back to power in Gujarat. But if it is on a diminished note, as you're pointing out, right, and that does really depend on how many seats they finally win, does this really mean much in terms of being able to read what happens in 2019? Because there's still a whole year between Gujarat and 2019 elections, more than a year. And so much could change. The economy could pick up, the mood could turn, a bunch of things could happen. So how critical is this?
Absolutely. I mean, look, the quick analysis would be that Mr. Modi can't afford to lose Gujarat. Otherwise, the government in Delhi will become lame duck, is a technical argument. And you are absolutely right that after 2 or 3 quarters, economy may actually pick up, and Mr. Modi may be able to retrieve some of his political capital and credibility. So, but losing Gujarat will give a huge impetus to the opposition forces. Next election will be Karnataka and then Rajasthan, which is already looking a bit sticky, and then Madhya Pradesh. So just getting into Lok Sabha election in 2019, there are other hurdles also. To overcome all of that, Mr. Modi will have to restore his credibility exactly like 2014, that 1 year kind of momentum that we saw. If he is not able to restore that, it will be hugely challenging way forward for him. He has lost lots of time in managing the political mood, or say BJP voters, or almost in campaigning mode. Now suddenly he realizes that there are serious governance challenges, and he has to focus on that. And these two announcements of highway build, highway construction, and recapitalizing banks are the indicators that now he understands that he has to govern also.
Sanjay, good morning. Just one quick question. The common narrative or the common belief right now is that this is the toughest fight that they've had on their hands, and imagine it's in their own backyard, so to say. But what if, there's a reference being drawn to 2012 wherein that Gujarat Parivartan Party by Keshubhai, which was floated to fight, ended up actually benefiting the incumbent government. What if the performance by the BJP in the Gujarat elections turns out to be better than what the betting market, as you rightly said, is probably the right reference point, is pointing towards? Does that actually turn the tide of sorts?
Look, I should be very careful in again reiterating my understanding. It is a straight contest. It will entirely depend whether BJP is able to get those last 5 voters to the booth, vis-a-vis Congress effort to get those 5 voters who are inclined to support Congress party as against BJP to the booth. BJP's effort is going to be to get that last voter to the booth. It is quite possible that actually party ends up widening the vote share margin from Congress and does extremely well. So if the margin is more than 15%, then there is a landslide and BJP gets 150 seats. But if Congress puts up a good fight, if the candidates are selected on the right caste arithmetic, and all these 3 young challengers can mobilize the forces and the cadre or their supporters and followers towards whoever is challenging BJP, mainly Congress, then the vote share the gap can be much narrower. In that case, BJP could look at actually 100, 110 kind of figure.
Sanjay, please get used to early morning conversations. This is going to be the first of many in the weeks to come. Thank you so much for some insights into what the next few weeks are going to bring in terms of battleground Gujarat. But I'm sure we have so much more to see in terms of what the Amit Shah and Narendra Modi election machine, as Sanjay puts it, will bring to the table to make sure that this is a landslide. This is now about pride more than political capital.
True.
It's about pride,
well
right?
said, yeah.
So I think it's going to be a promising November if you track political things. I think that brings us to the end of First Word.
Yes, it does. But stay tuned to Bloomberg Quint, because we'll talk about PSU Banks in greater detail. I think there is no other talking point besides FMCG and PSU Banks. So will the PSU Banks lead higher? Fundamentally, is there merit? We'll speak with Nirav Sheth of SBI Securities and discuss the 2 lakh crore PSU Bank recapitalization with industry expert A.K. Purwar and R.K. Takkar of UCO Bank. And of course, we decode RBL Bank's earnings with Managing Director Vishwaveer Ahuja. All of that's coming up in a bit. But a quick check on the day straight today. All important derivatives market for the morning. Agam Akli standing by with the setup. Agam, good morning yet again.
Good morning. Well, we've seen the Nifty hit 10,300 yesterday, though we did close slightly below that mark. The good news is that we have seen a return of fresh longs as far as the index futures go. Now, I know the October futures here shows unwinding, but that's because it's expiry. We are looking at a lot more accumulation, not only in the Nifty, but in the Bank Nifty futures as well when it comes to December and November futures. Moving in, we have seen the India Wix move up to a certain extent, and well, still below the mark of 12. So that's a positive as far as the bulls are concerned. And up as much as 1.5%. The Nifty put call ratio, surprisingly though, remains unchanged at 1.61. This is despite the fact that the Nifty has moved up, but rollovers have picked up, standing at around 44%, in line with the previous 3-month average. So now is the time when you have a little more confidence coming in as far as traders are concerned. What's happened in terms of options changes yesterday? Because of the fact that the Nifty moved up, we saw unwinding in the 10,200 call and a lot more writing in the 10,300 put. But what are those stocks that we're keeping an eye on? Well, IRB Infra moves into the F&O band. On the other hand, we have BEML and HDIL move out of the band. But of course, as you have continuously pointed out, we are going to be keeping an eye on the PSU banking stocks, namely SBI, PNB and Bank of Baroda, which have seen so much strength and so much accumulation towards longs in the December and the November futures. So all eyes on that, and perhaps a little more on the Nifty, or whether or not we can see it sustain above the 300 mark today.
We'll watch out for that. Thanks a lot for that, Agam. Abhijit Pathak, Director at Definet Solutions, joins us on the show. Abhijit, what did you notice, if anything different, about the trading activity in the PSU banks, and what does that tell you about what those stocks do today or over the course of the very short term?
Yeah, all the PSU banks have given a very big breakout yesterday, but I would like to see them cool down a bit over the next few days and then decide based on what action they do on the charts. It's going to be dangerous taking long position in them right now, because the rise like 30, 35, 40% in a day might have never been seen on PSU bank before. So we need to see how they stabilize over the next few days and then decide whether this move will continue or not. It's definitely not worth going long at this stage.
Abhijit, purely from the futures and options perspective, what could happen on the expiry day today?
Yeah, it really depends on whether there are any still call writers trapped in it. If that is there, then just to give you a level, if State Bank of India does not go below 325, it can go towards 335, 340 also. So that kind of levels I'm looking at. If it stabilizes between 320, 325 in the first half, then again the call writers will be under pressure and it might rise another 10, 15 rupees by the end of the day.
Okay, this is for the day today. Fair call. Now, what's the recommendation that you're giving out for the day today, Abhijit?
I expect a sideways Nifty in the first half, and maybe it can drift down towards 10,250 or 10,220 worst case. And I would recommend to go long in a 10,200 call near 40, 45 if Nifty is around 10,220 on the spot. And maybe at the end of the day, it might go back towards 10,300 once. And if it rises towards that and expires towards the high, I would recommend buying a November put for a couple of days.
Okay, for a couple of days, repeat that. Buy the November 10,000 put near the 10,320 levels. I think that you should be very, very clear about. Abhijit, good having you. Thanks so much for taking the time out and joining us today and giving us that perspective. Well, it's not just about what's happening in equities. A quick check on what's happening in the commodity markets as well. And to take the show forward, of course, Pradeep Pandya Johnson as well. Pradeep, good morning.
Good morning. So look at commodity markets. Actually, all eyes are on ECB. So debt and forex market will remain in focus and people will take a cue from there. So as far as commodity trade is concerned, gold futures rise a bit, second time in 3 days, but there is not much movement there. If you see, the action is more in the foreign exchange market where dollar has declined ahead of ECB meeting. So some strength for euro. What will really happen is something to watch out for. will ECB reveal its card and give us an idea as to when they want to taper and at what pace? All eyes will be on that. But if ECB is not very hawkish, dollar could actually rebound, because if you look at the US yields, 2-year yield has hit 1.623, which is the highest since 2008. Yes, 2008. So a 9-year high on 2-year US paper, 2-year paper yield. Treasury note is very significant. Even the US 10-year has gone to 2.475, which is highest since March this year. So 6 months high. US markets are actually looking at a more hawkish Fed compared to what we expect from ECB. So that is going to be very significant, and dollar is something to watch out for. Well, crude dipped a bit because of gains in inventory that were not actually foreseen. But on the other hand, we also see the gasoline inventory falling. So there is significant demand. So I don't know how much crude can really correct. Talk about other commodities, actually mixed on LME. Even in Shanghai, if you see, the trend remains more or less mixed, not much action there actually as far as base metals are concerned.
Okay, and the Asian markets have shown their hand today. It's a bit of a quiet morning. The SGX Nifty likely to start off on a slightly weaker note. But amidst all of this, and amidst PSU Banks and HUL and consumption, I think it's important to keep an eye out on what the overall earnings picture is looking like. Darshan Mehta, as usual, Johnson's, to have a check on earnings that are reported post-market hours and give you that earnings heat map. Something I look forward to every morning. Darshan, what does it look like?
See, it looks decent, because if you're seeing, the greens are much more than the red. So counters like RBL, PNB, EIL, Everest Industries, Syngene, all of them came out with strong set of numbers. Among the weaker ones, obviously, there are these large names like PI Industries, M&M Financial, Exide, Tata Communication. HUL and Mindtree were pretty much in line. So let's talk about some of the stronger numbers that came out. First of all is Engineers India. Much above what we had anticipated, a growth of 27% on the top line, a growth of 25% on the bottom line. No doubt this has a deferred tax revenues, the profit had a deferred tax of 14 crores. But nevertheless, margins coming in at almost 32%. Our estimate was 26%. Severe amount of cost controls was seen by the company, so that is a positive. The next one is a smaller company and pretty much could be the result of the day. Everest Industries came out with a strong set of numbers. From a loss of 8 crores, it's moved to a profit of 5 crores. Revenues moved up almost 7.5%. Negative EBITDA margin last time around. So it's moved into the positive even on the EBITDA front. Cost controls, and they managed to halve the finance cost. So that is extremely positive. Syngene came out with a strong set of numbers. Revenues were up almost 10%. Profits were up almost 3%. EBITDA up 7%. The margins were down on a year-on-year basis, given the fact that the revenue growth was much higher, but still higher than our estimate of 32%. So Syngene, strong set of numbers. On the weaker end, now you had Exide, which disappointed, even though the revenue growth was almost 23%, and that was on account of price increases that they have taken. Commodity pressure certainly being seen. On the net loss, the net profit front, there was a decline of 26%, given the fact that there was an exceptional loss because of some settlement. If you look at the margins, margins also came in lower by 12%, given that lead prices have moved up significantly. So commodity pressures are here for the company. M&M Financial, again weak set of numbers. NI grew 16%, but the profit almost falling in 18% for the company. The NPL cycle has been shifted from 90 DPD to 120 DPD. So that is something that you have to watch out for. And they had to make an additional provision of 247 crores as per RBI norms. Even if you exclude all this, M&M Financial numbers are weak this time around. And finally, PI Industries, weak set of numbers. Revenues down 2%, profit down almost 21%, margins down to almost 21% from the 23%, and even a drop of almost 5% on the EBITDA front. So some of these are large companies, but yes, weak set of numbers from PI Industries, Exide and M&M Financial.
Yeah, I think it's a sketchy quarter continues for PI in particular, but M&M Financial as well. Thanks, Darshan, for putting all of that into perspective. A very special guest, Chakri Lokpriya, Managing Director at TCG Asset Management, joins us right now on the show. Chakri, good having you. Thanks much for joining in. Now, tell me, Chakri, this is something that we've been wanting to know. I'm jumping straight to the gun. The PSU banks. Now, I'm guessing all of you, including players like you, were under own, for sure.
Yeah.
Would you be comfortable looking at the move to go out and buy these PSU banks, not necessarily today or the course of the next few days, maybe not right now, maybe 4-5% lower, but would you be comfortable buying them?
Indeed, and I think we'll be comfortable buying them today. We bought some yesterday and we'll continue to buy for the simple reason that Going into the trade yesterday, all these banks were trading, including State Bank of India, the largest bank in this country, was trading at 0.6 times book value. So even after the 30% run up, it's trading at probably 0.7 times book value. Now, when you have a huge amount of capital infusion, at the same time, the government has created demand, which is that Bharat Mala. So that creates a demand for credit, and road projects are typically funded by PSUs. So I think there is a long way to go in terms of upside for these stocks.
But if you look at it, because of these long gestation periods, the infrastructure that was funded earlier, we ended up with so much of mess in terms of NPA. What is your call on NPA going forward? Incremental NPAs as well as the cleanup of the backlog that we have got? Because for so many quarters, we have been watching just one number for all the PSUs, and that was slippage and gross NPA.
I think excellent question, and here there's a bit of a circular logic. In terms of now with the capital recapitalization of these banks, it in a sense reduces the existing stress on the existing NPAs, because some of them, they'll have to take lower haircuts on existing NPAs and then move on in life, because then they become performing assets. Those companies can go out and capitalize themselves, do a QIP, do an FPO, various corporates, that is. And banks, on the other hand, now the capital is freed up, so they can go out and make fresh loans. Who do they make these fresh loans to? The government has created these road infrastructure projects.
The only question, one quick follow-up out there is that you would have 35% exposure to financials in any way, Chakri. Most people would. Would this allocation come at the expense of private sectors? I would guess so. But which pocket out there?
The last few years has all been about retail lending, all the retail banks, HDFCs, Kotaks of the world, and not the corporate banks, including the ICICI and the Axis of the world, are in problems because of NPAs created because of corporate lending. And now with corporate loan demand, which is going to pick up, and given the fact that PSUs are under-owned, the ownership will go up quite dramatically.
Okay, so you would reckon that ownership of the PSUs and corporate-facing banks would come at the expense of the...
Not necessarily at the expense, but I mean, some of the, yes, people went hugely overweight on NBFCs, overweight on some of the retail banks. So that ownership will come down, because also you have to step back and look at the PSU Bank Index. HDFC is still by far the largest weight in the index itself. And so when you are running a banking fund, or even Nifty for that matter, 40% of nearly 35% of the index is in banking. And if you look at that, all the banks, majority of those banks are the private banks, for the simple reason that the last few years, PSU bank weights has gone down, private banks weight has, as a result, gone up. Long story short, in that, now you will see greater allocations to PSU banks.
But if you look at it, the logic which was going around before all this development was that NBFCs are expensive because they are quoting as such and such valuation. We have never seen a down cycle in consumer credit. It may happen anytime because there is no job creation, no growth. Now, if you expect job creation, if you expect growth, the NBFC lending should in fact go up and not down. So the logic quite doesn't, really match.
Indeed, but the slight difference this time around is because, when you have a kickoff of road construction, which happens, these are the casual laborers who will start, digging the ground, laying the roads, etc. And those are not the people who NBFCs
it has a multiplier. It has a multiplier effect. It happened in 2002, 3, 4, right?
So the first step of the lending will happen at that phase. Where PSUs are strong, because they have branches in all small towns and places all along the highways. At the same time, NBFC's valuations will come down a little bit, but on the other hand, the overall scene is still positive.
Okay, so we'll come back to that, but let's go across to our research team and find out what are they really watching. Important results and research reports that have come out post these numbers. And to begin with, we have our research team with us. Shraddha, first of all, RBL, because that's an interesting bank. We have been talking about overvalued private sector banks. Now, do these numbers really justify valuations?
Well, in case of RBL Bank, and if you look at the September ended quarter numbers, yes, they do. I mean, there was all-round performance across parameters. Growth momentum continues. So, if you look at the key numbers, net interest income grew 38%, net profit grew at a strong 67%. There was a bump up of 20 basis points on the net interest margin as well. Even if you look at some of the other parameters, On the asset quality front, gross NPA came in at 1.44% versus 1.46%. Advances grew by 35%. CASA saw traction and the CASA share has only improved. So, Pradeep, no complaints really as far as any of these parameters are concerned as far as RBL Bank's numbers.
Okay, so the next number is Yes Bank to watch out for.
Yet another private sector retail focused bank, but again strong earnings growth trajectory is expected to continue for this one as well. So if you look at the net interest income, that's expected to grow 29%, net profit expected to grow 29% at 1035 crores. That's the number that the street is working with. Margins expected to remain stable at 3.6 to 3.7%, aided by the recent cut in savings interest rate. Among the other factors, loan growth expected to come in at a strong above industry average 30% sort of a number. Gross NPA is expected to remain stable at 1%. The asset quality performance has been better for this bank compared to some of the other ones, so that is expected to continue. But broadly, yes, we will be keeping an eye out for the management's guidance with respect to the top 40 or 50 NPA exposures, because that's really something that will move the stock.
Okay. Nikki, what else is actually in news? A lot of fundraising, I guess, IPOs and
yeah, so yet another insurance company tapping the market. HDFC will be in focus for that matter. HDFC Life Board has approved an IPO for up to 29.98 crore shares. It's expected to rake in anywhere between 8,000 to 13,000 odd crore from the market. Now, this is an OFS and group company HDFC and JV insurance company Standard Life is expected to offload as much as 9.5% and 5.42% stake in the IPO. The second one that we have on our list is Navkar QIP that opened in for subscription yesterday, and the floor price is set at 193 odd per share. This is almost as 2 to 3% discount from the current market price. Then third one that we have on our list is Quest Corp. Now this is a Thomas Cook owned company which is planning to acquire as much as 70% stake in Vedant Cellular Services for an amount of nearly 40 odd crore. That's a small number, relatively small number coming in there. Polaris Consulting is something that we will also keep an eye out on, because it's the board is going to be meeting on October 30 to consider delisting of shares, and it's also going to be appointing the merchant bankers to conduct the due diligence for this. Another companies, bunch of companies actually that we have in our list include something like SR Jindal Group, and also something like Ballarpur Industries, Sri Renuka Sugars. Now these are the companies that have made it into the list of Axis Bank NPA. Now this is an FE exclusive report that I'm talking about.
Well, thanks a lot, Nikki and Shraddha, for all these details. We'll watch out for these stocks. But Chakri, you know, when we are talking about a derating of private financials as such, what happens to insurance? What's your call there?
Insurance is a brand new sector for this country in terms of being listed companies. And the scarcity premium, which will allow some of these companies, including ICICI Lombard, for example, to maintain its valuation. So we don't really see a big derating because it's still a very under-penetrated market.
But, okay, so, and let me extend that question to one, some of the stocks in news, two, some of the results that have come out, Chakri. I was just looking at the list of companies, and Darshan was speaking about them as well. There are some pockets of NBFCs which could continue to come out with patchy numbers. Life insurance companies this time around haven't had the best quarter. Bajaj mentioned that in their chat as well. ICICI Prudential was ho-hum. Today I was looking at M&M Financial, which also has now started an AMC arm too. What do you do with some of these?
You know, insurance goes through, again, is also linked to the economic cycle, because, you know, some of the bulk purchases for the insurance industry is made by large employers and medium-sized employers, and employment being weak has resulted in the whole chain of knock-on events of various segments of insurance growth rates to kind of moderate. But that is still, you look at it as a country, it's still very under-penetrated and all those good stuff. So from that perspective, these are more near-term issues. And as the economy gradually recovers, whenever that is, you will see increased premium sign-ups.
So it's largely believed that, you know, the IPOs are kind of overpriced. How much correction should one wait for before getting into the newly listed insurance companies?
Yeah, you know, even if you look at ICICI Lombard, it's a company which has a phenomenal reach. And so from that perspective, is 6 times overvalued. Well, if you fast forward it sufficiently into the future, those multiples come down. So from that perspective, I don't think being young, new companies, as in listed companies, they're large companies, but new companies. So from that perspective, valuations is less, takes a back seat in the initial years.
Okay. Stay on, Chakri. So much more to talk about. We also have to get in our technical experts on board. But before that, it's 8:50, that time of the show wherein we get you a special segment, Bloomberg Edge, wherein Jayesh Khilnani joins in with what the Bloomberg terminal is saying about a particular stock. In today's session, I think the terminal is throwing out a technical indicator on PVR, Jayesh.
Yes, morning Neeraj, that is right. So we have PVR as the stock, and there is an interesting chart pattern formation on the chart of PVR, which is bearish engulfing. Let's first have a look at how the bearish engulfing is and what are the conditions that you need to watch out for. So it is formed at the top of a trend, and a bullish candle has to be followed by a bearish candle. I'll get to that more in detail when we look at the chart. The other criteria that you have to watch out for is that the second candle body has to be bigger than the body of the first candle that we have, and it has to be engulfed entirely. Longer the body of the second candle, the better the chance that we are actually looking at a top formation. Now let's go back to the chart of PVR that we have. So that's where we are looking at the bearish engulfing. The red candle that you see, that has actually entirely engulfed the previous green candle that is there. So the first criteria was that it has to be formed at the top of a trend. So you can see this uptrend, and this is where the formation has happened, and the bullish candle has to be followed by the bearish candle, which is this red one, and the entire body has actually engulfed the previous candle that we have. So no further confirmation needed that we could be looking at a particular at a top coming in for PVR and for potential further downside for PVR.
Okay, have you done any kind of back testing here?
So Pradeep, no back testing on this particular because it's a pattern, but previous 3 or 4 instances that this pattern has actually been generated, we have seen that the stock prices have declined substantially.
Okay, so let's see how much impact will this pattern really have on PVR. Thanks, Jayesh, for this call. Moving on to Samit Chauhan, Chief Analyst, Technical and Derivatives at Angel Broking. He's joining in now, and also Rahul Randeria, Technical Analyst, Institutional Research at IFCI Financial Services. Rahul, we'll go straight to your calls for the day. Which stocks are you looking at?
Yeah, good morning, Pradeep. I have 2 trading calls looking at the undertone of the market and specifically in the capital goods segment. First call is in buy in L&T, where the stock has been consolidating for a very long period of time in the last couple of weeks, and yesterday we have seen a breakout supported with very strong volumes. Definitely any pullback intraday, maybe cool off in the markets, should be used as a buying opportunity. My buying range is 1204, and on corrections to 1190. My short term positional target is 1260 with a stop loss of 1169. My second buy call is in REC, where the stock has been consolidating, and yesterday we have seen a bullish pattern supported with strong volumes. The momentum is slowly and gradually building up in the stock, so we could see a decent rally coming in the coming days. So definitely buying range is 163, and on correction to 158. Short term target 180 with a stop loss of 156.
Interesting. Samit, Rahul will of course come back to you for some other ideas as well. But Samit, your stock recommendations, I'm choosing 2 of them right now. One is a buy call on McDowell, United Spirits. The other is a sell call on HDFC Bank.
Yes, McDowell certainly looks good. It has been consolidating in a range, but if we look at it from a slightly broader perspective, it seems that the stock has completed its corrective phase. And looking at yesterday's price action, we believe that the stock is likely to continue its upward trajectory. Our immediate target for McDowell would be around 2686. It can be bought with a stop loss of 2488. Our second call is a sell call on HDFC Bank. Very seldom we see, HDFC Bank falling nearly 4% in a day. And yesterday we saw, the stock falling below its important support levels of 1800. Looking at yesterday's price action, we would expect, continuation of some kind of follow-through selling. We expect HDFC Bank to slide towards 1758, which is a major support level in the near term. It can be short sold with a stop loss of 1808.
We have talked about the banks actually, but if you look at United Spirits, I think the company will be announcing results today as well. What do we really expect, Chakri?
This is a stock and sector which I have not focused on lately. And so I wouldn't really have a
So is it on ethical ground or fundamental ground?
No, nothing ethical about it. It's about a fundamental call more than anything else.
Okay. That was a googly, Pradeep.
So that gives some indication.
Yeah, it does.
Yeah.
No, it's a brilliant question because, yes, there are people who kind of don't do that. Yeah, that's true. Okay, what did you make of the battery makers' results? I mean, at least Exide has come out with numbers and the operational performance wasn't great, maybe due to lead prices or otherwise, but what was our sweet spot?
I think a number of things have happened, both in terms of whether it's two-wheelers, automobile or telecom. The rollout demand has slowed down, whether it's and so this is more a near-term phenomena, and because still you have on the automobile side a cycle which will, because of all the well-known factors that slowed down in the past. And so that cycle will pick up at some point. And so these are companies now which will grow at a steady state. You won't see that phenomenal growth rates of the past. And in terms of valuations, they're not really, cheap. So from that perspective, these would tread water for some more time before the growth kicks in.
Where do you see phenomenal growth, Chakri? I mean, let's leave aside the PSU banking conversation. Yeah. We've quizzed you enough on that. Beyond that, where do you see phenomenal growth, if you see phenomenal growth at all?
We are seeing in various sectors which are export related, because the US, Europe and various parts of the world, the economy is recovering. And as this is recovering, whether it's textile companies, chemical companies, petrochemicals, plastics, all these things get 50–60% of their revenue or more from export markets. So I'm not talking about the traditional IT and pharma, which are export markets. Now these, combined with a global recovery cycle, we are seeing it's north of actually 20–25% growth in some of these sectors.
So what, specialty chemicals,
specialty chemicals, like for example, Aarti Industries. That's a company which makes specialty chemicals across for various industries, right from pharmaceutical to consumer. A large product base. Its revenue should grow north of 15%, earnings should grow north of 25%. And companies like Make Money Organics has done phenomenally well, but will continue to do well. Again, the same story. Or you take Trident, which makes terry towels, bath linen, bed linen kind of products. US is its largest market. And this is a company with low capacity utilizations, and now with US recovering, earnings should grow north of 30% for the next 2, 3, 4 years. So these are just examples, but in these sectors, we are finding strong growth.
Do you track Quest Corp? I think the bottom line is boosted by an extraordinary tax credit. Quest Corp is the one we're talking about. 25% growth in top line, which is interesting.
Quest and Team Lease have benefited from actually the reluctance to make full-time hires. and this has actually worked well in their favor, will continue to do so for the next few years. And because temp hiring as a phenomenon is catching on, and for well-known reasons of uncertainty of the corporates to make fixed long-term commitments. So from that perspective, yes, we do see strong growth.
And it's been an interesting move for Team Lease in particular over the last 6 odd months. I remember in March or April, the stock was at maybe 950 odd Team Lease. It's now at 1636. That's the 12-month picture, about 60 odd percent. But you could well argue that this growth has happened in the last 6 months. Similarly, for a Quest Corp, I would reckon that again, my numbers may be a bit odd here and there, but I think Quest Corp 2 over the last 6 months, maybe not as strong as Team Lease, but has sustained growth. But yeah, Team Lease certainly been the stronger of the two. But the numbers of Quest Corp, interesting, should be keeping the stock entertained. 12 seconds to pre-open. Remember, the Asian markets have shown their hand. It's a flattish start. The SGX Nifty pointing towards maybe a bit of a pause today, but that's okay. I think it'll all eventually boil down to the Bank Nifty and what that one does in the session today as well. But these are the first rates all over the place. The Sensex up about 1%. We'll not see those rates. The Nifty flattish, probably a more believable one. Straight jump to PSU Banks. There's no way I can speak about something else. Bring up the SBIs, PNBs, BOBs of the world. Maybe there could be a case for a pause today before the uptrend resumes. I'm presuming there's an uptrend resumption because of the conversations that we have had with a bunch of players, because of what Chakri Lokpriya said today as well. But yeah, the SBI, BOBs and the PNBs, Canara Banks, even the smaller ones, the IDBIs and the Bank of Maharashtra has had a field day. So that is one pocket. And very quickly, just on the flip side, HDFC Bank, Yes Bank, Bajaj Finance, Indiabulls Housing Finance, these had a terrible day yesterday. Let's see. If that continues, it's essentially a switching of positions. Let's see if that continues in today's session, or is today, because of expiry, a slightly different day of trade. We'll get to know that during the course of the session.
So some relief for private sector banks. Let's see what happens to RBL Bank and PNB Housing after those spectacular numbers. RBL Bank is here up 2%, 235 is the quote right now. Can we look at PNB Housing as well? That's up 4.5%. Look at some more financials. M&M Financials overall not so good quarter. So there should be a downtick here, down 1.5%. Well, these stocks have corrected already yesterday. Look at EIL, strong quarter for this one. And also look at some of the metal companies like Jindal Stainless, Hisar, what happens to that following the anti-dumping duty. These would be some interesting counters really to watch out for. And also some of the IT companies like Mindtree, how is that one doing? Revenue up just 3.5%, but EBIT was significantly up, so the reaction is muted, up just 2% this one as of now. PI Industries, another stock where performance has not been so good. How is that one? Quoting down 5.5%. So that's the reaction. Tata Communications would be another liquid stock to really watch out for after disappointing numbers. So to say, is down 10%. Wow. Aztec Life Sciences should be another result. I think that we'll be watching out for. How is that one doing? Down just 1%, so flattish.
Yeah, the currency 64.78. By and large strength in the yields and maybe the dollar as well, but 64.78, Pradeep, from 65.02 day before yesterday.
Yeah, so that's interesting because probably is market really taking a call that there will be significant equity flows that would more or less offset if there is any reduction in the debt flows going forward, if at all. So this is kind of a really strong performance. And currency is one market that had probably reacted in advance. I would say from 63.5 we went all the way down close to 66 and then recovered. So this one market had corrected a bit.
It's a strong move in the rupee though. Very interesting. Ahead of the ECB meet today, the rupee-dollar equation showing an interesting trend. It's a busy day of trade, I must tell you, for all of us. Just a quick word on the currency, Chakri, since you spoke about exports. What does this bode for the spaces? What's your rupee view as well?
In terms of my view on the rupee, while I'm no currency expert, is linked to the Indian economy. I'm a firm believer that as the economy recovers, the rupee strengthens. And in other words, it goes from 64 to 63 kind of a thing. And because at the end of the day, an economy, the currency is a reflection of its economy. And while that currency fluctuations would cause near-term contract mispricing for some of the exports, the overall picture for exports looks very strong. So these companies look strong.
Okay, fair call. Okay, that's a comprehensive view. Pradeep Chakri speaking about the rupee. Let's get in Saloni Dhanika to speak about what are the big brokerage calls for the morning today. Saloni, good morning.
Good morning, Neeraj. So firstly, CLSA maintains a sell rating on Tata Motors, but however, they have hiked the target price to rupees 395 from 380 earlier to factor in lower foreign currency losses as the pound remains strong overseas. Now, they believe that demand for luxury auto in the West has declined and has thereby affected their JLR sales. Also, volume growth excluding new models has declined sharply. Now, they expect margins to remain under pressure given rising incentives and weakening product mix for Tata Motors. Secondly, UBS initiates coverage on public sector oil marketing companies. Now, they initiate coverage on IOC, HPCL, BPCL as well as CPCL with a buy rating. They see an upside potential of over 30% in all these oil marketing companies. However, they maintain a neutral rating on MRPL. Now, they expect earnings to pick up for these OMCs, particularly driven by steady volume and margin expansion. They also believe that government support on free pricing for cooking fuel, that is LPG, will further add to earnings growth, and hence they factor in a 12% compounded annual growth rate for FY18 through FY22 for all these companies, Neeraj.
Thanks, Saloni, for all these details. So these are some of the significant reports that will affect stock prices in today's trade. We expect PI Industries, well, that is one number which was disappointing, and we saw the early reaction in stocks. It's down only 2.5% now. Chakri, do you track this stock? Any views?
I don't track the space, but it's partly it was growing in very strong expectations into the current quarter. And I think that's partly the reason you're seeing some of the weakness.
You know, it's disappointed a number of times now, PI Industries, the last few times. You've had stocks like UPL, etc., do much better. Somehow PI, being a large player and otherwise, hasn't quite lived up. This whole chat of the promoters wanting to sell out to a Chinese or a Japanese player, I don't quite remember which. Since that talk has resurfaced, somehow the stock has lost its mojo, so to say. Used to be a very promising company, probably still is, but somehow the results have left a bit to be desired. By the way, speaking of Tata results and reactions, Tata Communications no longer down 10%, but still down about 4% in the session today. So that one is looking weakish in trade. A lot of talk about the PSU banking trade as well, so we will talk about all of those. Actually, speaking of PSU banking trades, we haven't got one in the session today from our technical expert at least. So Rahul, would there be a PSU bank that you would go out and trade this morning for the expiry day?
Yeah, it is very difficult to call today because already yesterday we have seen 30%, 40% rise in an intraday. That was because of the government package for the banks, PSU banks, as well as the short covering. Now the momentum is strong, so we could see another set of rally today, but it is very difficult to pick up the trend and trade for today because the risk reward would not match. Maybe the reward would be less and risk would be higher. So I would wait for some consolidation and then take a call. It will take some time, but definitely I will not trade for today.
Chakri, for a trader who doesn't mind taking a 2-month position, I'm asking you to wear a trading hat. I know you're not a trader per se, but for somebody who's willing to take a 2-month position, there are a couple of global events like the US Fed and the ECB today, but you would reckon the stocks would be higher from where they are right now?
I would think so. They will be higher from where they are.
SBI's,
the SBI's, all the PSU banks. They would be higher, especially all the big ones. The SBI, Bank of Baroda, PNB, Canara Bank, Union Bank. They all, resumption of growth, I think takes them much higher, or at least expectation of growth.
You know, this question is very difficult to answer because I liked what Darshan shared yesterday. The one-day gain of PSU banks were comparable with year-to-date gains of private sector banks. So the kind of move, 50%, close to 50% move in PNB after that, it's very difficult to, have courage and go out and buy.
True, but, just the benefit of having spoken to 3 odd fund managers, etc., and all of them, they said that after the 20% up move, they actually had to step into the dealing rooms and tell that, okay, hey, let's increase the limits and go out and buy. And people actually placed in punch orders for a State Bank of India, for example, at 305, 310 or thereabouts. So there has been frenzied buying, some bit of short covering as well as the data suggests. Let's see if that lasts today. But yeah, because it's a difficult question, we posed it to Chakri and didn't try to answer it ourselves, quite frankly. But 908, the pre-open rates have settled. Let's just bring up what the Nifty and the Bank Nifty, more importantly, are doing in the pre-open rates. Should have settled slightly lower than Nifty 50. The Nifty Bank could probably come up, but the PSU banks would be the interesting ones. PNB certainly showing some upsides. Nifty Bank, interestingly, is down, maybe led by private banks. Difficult to foresee an SBI or a PNB or a BOB correcting viciously in trade today. I think maybe the more vicious corrections could come in from a bunch of these result reactions that we will see, the likes of Exide, M&M Financial, and some of the others. Samit, just one quick word really on M&M Financial. How do you trade this one?
See, clearly off late, we witnessed some kind of consolidation in this particular counter. And yesterday we saw a correction in the stock. 390, 388 would be the level to watch out for. It would be a make or break level, at least in the near term. Higher degree bull run still remains intact, but we believe that the stock is likely to remain under pressure, at least in the near term. Once this stock slides and stays below 390, 388, we could see further slide probably toward 370, 365. So for a time being, one should trade with a slightly negative bias. Any bounce back from current level would be an exit opportunity if you have existing longs. And if you are a short-term trader, you can, on the bounce, you can go and short this particular counter since 420, 425 has become a very strong resistance now.
Okay. Minutes away from market open, let's tell you all that you need to know to stay ahead in the session today. Yes Bank, Biocon, Crompton Greaves, Consumer Electricals, Cummins India and Equitas Holdings are some of the key numbers that will be reported today.
And also RBL Bank, PNB Housing, Engineers India, Everest Industries, Syngene, companies that reported strong numbers post-market hours is something to watch out for.
May see some result reactions on the other side from Exide, M&M Financial, PI Industries and Tata Communications, all of which reported weak results. HUL and Mindtree met analyst estimates.
RBI has asked HDFC Bank to classify one of its account as a non-performing asset. The ADR ended lower by 5%. There could be some impact in Indian markets as well.
BEML and HDIL are out of the F&O ban on expiry day. IRB Infra is the new entrant into the ban.
And Polaris will be in focus after the parent considered a delisting of the company. Well, stock has already moved up 13.5%.
Well, this would be interesting to watch out for. So watch out for Polaris. I just want to mark HUL. We didn't quite talk about it in the pre-open session, but HUL should come up on your screen. Very interesting quarter. The stocks probably had some moves already, so just up about 1%. And of course, the valuation is never cheap for HUL. Under most circumstances, not cheap. Today's session just higher as well. Chakri, one quick word on HUL and Asian Paints. The reported numbers and the commentary. Cautious optimism, I thought, but what would your sense be? And how does this bode for the space?
HUL and Asian Paints kind of sidestepped the GST problems that some of the smaller players faced. And they were better prepared, they prepared their distributors better, so the whole 9 yards was fairly well orchestrated. And in terms of demand, it seems to be fairly okay. I mean, there was nothing out of the ordinary and negative. So from that perspective, the stocks continue to do well, both HUL and Asian Paints.
You would reckon it bodes well for the space at large or no?
In terms of the space, yes, the larger players, yes. The smaller players, still because of GST-related issues, it'll take some more time for them to fix themselves out.
Rahul, NBCC is a stock that we have been watching for last few sessions. You know, yesterday it corrected quite a bit from higher levels. Today, again, if you look at the pre-open quotes, is up around 5%. What's your call, Rahul?
See, Pradeep, if you look at the overall charts on the larger degree front, since 2015, it has been moving high, making higher tops, higher bottoms in an upward rising channel. And a couple of days back, we have seen a breakout and we have seen a sharp roll. Yesterday's move was a pullback, and again, I feel that there would be more pullback on the downside. Maybe stock could settle down around the range of 230, and that would be the area to enter for the long-term investment. Because looking at the overall chart, I feel even if the equidistant height of the rising channel comes, the target comes around say 330, 340. So definitely for 8 to 10 months or 12 months of investment, 230 is the area where one should accumulate. And for investment perspective, one should place a strict stop loss below 200. Start accumulating around in the range of 230, 220 odd levels.
Okay, just about a minute and 40 seconds to go. Quickly taking top trading recommendations from both our experts. Samit, to you first. If you had to trade one stock, your top call for the day today.
See, I would rather recommend call option. Adani Ports is the stock that we are liking. Yesterday we saw decent long formation in this particular stock, and 4 and 10, 4 and 20 call option we saw decent unwinding. So that indicates that the stock is likely to give a decent move today itself. So we would recommend 4 and 10 call buy, which is trading around 6.5 rupees. Keep a stop loss around 2.4, and we would expect a decent up move today itself. We have a target of 14 for Adani Ports 4 and 10 call.
Okay, so this is an interesting trading idea that Sumit is sharing. Rahul, anything you would like to share?
Yeah, for trading among the cement sector, I'm liking ACC, where stock has been consolidating for last couple of days, and stock is on the verge of a breakout. So definitely, swing traders can buy at current levels with a stop loss of 1740. My upside positional target is 1881.
Okay, that's interesting. Two calls. One is an Adani Port call option. The other one is ACC. These are the top two calls from our experts in the session today. 30 seconds to market open. Keep in mind, Ultratech had a really strong day of trade yesterday, as also the last few days. So cement could be an interesting pocket to watch out for. If Bharat Mala is to be executed, cement becomes a necessary commodity too. Let's wait and watch. The results and the commentary from all three large players has been anything but weak. So watch out for those as well. But it will all be about what happens to result reactions today, quite frankly, but also what happens to PSU banks like PNB, which has shown its some strength in the pre-open session in today's trade too. But this is what the rates are looking like. A flattish start for the benchmark indices. The Nifty Bank, interestingly, after a 3.5% up move, is showing a downtick. Don't read too much into this. This is just too early a trade to look at the Nifty Bank. I think it might make sense to look at the Nifty Bank maybe 15, 20 minutes or 30 minutes post-open, because that is
is where the real strength of the Nifty Bank would come about. Let's pull up the heat map and show you what's moving and what's not. State Bank of India continues to rise and shine, another 1.5%. That's interesting. Larsen & Toubro higher. Infosys has made a bit of a comeback, another 1% up in the session for that one. But it's even Stevens. It's split right down the middle. More green than red, yes, but even Stevens. Some heavyweights which are continuing to lag includes an ITC which is down about 0.5%. Bharti sees some course correction. And private financials, HDFC, ICICI Bank, which was actually up in trade yesterday, but HDFC Bank, Indiabulls Housing are all correcting in trade. Want to mark HUL in trade? Let's pull up that stock and see what that is doing, and then get a bunch of these PSU banks, maybe even an Ultratech. HUL, well, not too much of a reaction, quite frankly, a flattish day, but at par kind of numbers. Pradeep will mark a bunch of other result reactions, I'm sure, but I just want to mark the PSU banks. So bring up SBI, BOB, PNB, Canara Bank, maybe some of the smaller ones as well, and see what they are doing. All of them in the green. PNB about a couple of percentage points. Canara Bank not so. Union Bank of India should come up on your screen. And I also want to mark what the IDBIs and the Bank of Maharashtra are doing. So after a really big day, this is probably par for the course. You have a slightly flattish start. Let's wait and watch what happens during the course of the day. But the reason the Bank Nifty is down is because of the HDFC twins, to an extent even ICICI Bank. These three are looking slightly weak in the session today as well, after the correction that we saw in trade. But the Nifty Bank, as I said, don't look at the first tick. It's already showing signs of recovery. Let's wait and watch what happens for the next 15 minutes. But Pradeep, I'm sure a bunch of result reactions and some other stocks that you want to mark out.
Well, Polaris, first of all, is up 16%, has gained 2% more after a gap up. So that is significant. Also, look at some interesting stocks here. PNB Guilds and Corporation Bank is one which has moved up by 6% today. Quest Corp, we have been talking about this, up for 5%. Interestingly, 2% gains after a 3% gap up. So that is also interesting. You have some more stocks like GVK Power and Infra. Well, that is interesting, up 5% after they have confirmed having received a letter for the new Mumbai airport. So that is the trigger here, really. NBCC continues to trade strong, just in line with what we saw in pre-open trade. On the negative side, we have JP Associates down 11% after Supreme Court refused to give them any relief. JP Infra Tech follows with a loss of 5%. PI Industries, Aztec Life Sciences, disappointing numbers that we talked about, even Exide Industries, all these stocks have opened weak as well. Well, some of the stocks which saw a follow-on selling after weak start were JP Infratech. That one stock should keep in mind, down 5% now, but JP Associates, mind you, is down 10% already. There could be some more downside in JP Infratech so far as, the early ticks indicate. Shriram EPC is another stock which is losing after a decent start. There is significant selling pressure, which is seen on the screen.
Yeah, not surprised with JP after the AG's comments yesterday. Anyways, final thoughts from all our experts. Chakri, to you first. For the benefit of our viewers who are tuning in, I know we've discussed PSU banks enough, but you would reckon that there could be comfort that fund managers like yourself as well could derive even in buying these stocks after they've moved up the way they did yesterday.
Indeed, we will buy PSU banks, infra companies, as well as export-related companies.
Okay, and then Chakri Lopriya has a set of ideas pretty very clear. Really appreciate you taking the time out and joining us today, Chakri. Thanks much for being with us today.
Thanks for having me.
Okay, that's an important market voice, Chakri Lopriya. Final thoughts from our technical experts as well. Samit, to you first. Any thoughts on open? Any stocks that you are looking to trade?
Stocks we've already discussed, but as far as Nifty is concerned, for the day 10,250 seems to be a very strong support. If we see any kind of decline, then considering yesterday's action in 10,200 and 10,300 put option, we saw a massive put writing. So that probably indicate that traders are expecting this expiry to pan out at least beyond 10,300. Overall, we are a bit cautious, but as far as today's activity is concerned, in case if Nifty dips around 10,250, 10,260, that would be an opportunity to go long at least for 50-60 points.
Rahul, any opening thoughts?
Yeah, if you look at for index for today, I would avoid, because today would be a tussle between the buyers and the writers and the buyers of the options, so it would be difficult to trade. But positionally, I feel that Nifty, any dips in the Nifty should be bought with a stop loss below 10,200. Positional target is 10,410. For trading, I am liking Century Textile. After 4 days of consolidation, yesterday we have seen a breakout, so definitely any pullback for intraday one can buy. Stop loss should be 1315 on the downside. Upside positional target would be 1400.
Well, thanks a lot, Rahul and Samit, for taking time out for us this morning. So Nifty and Bank Nifty are trading weak, and that's why experts want to avoid it because they're also extremely overbought. But let's talk about banks. Nirav Sheth, head of institutional equities at SBI Capital Securities, joins us on the show. Nirav, thanks a lot for joining us. Banks are really the flavor of the day, second day in a row. But the stocks have moved up by 20% to 50% roughly. If you look at PNB, is there still an opportunity, or this is too much now, one should wait?
So you can't get anchored by what has happened, right? In a sense that if you look at what has happened in the last 2 days, the stocks are up by 50%. And if I look at the last 5 years, the stocks have not touched the 2012 levels, right? So I'm not too worried about that. It's a big thing, right? If an FM comes and tells you that, I'm taking the bankruptcy risks away from this set of companies. Secondly, I think it's a big move for the economy uptick, right? I have never seen any economy in the world which can pick up without credit growth picking up, right? And which was my basic concern, that how could you not have monetary stimulus when my credit growth is at decadal lows? This unclogs that credit cycle. And when you unclog the credit cycle, it unclogs the growth rate. So I think that this is a big move, I think, for the economy, and obviously PSU Banks, one-sided trade, right? You had Bajaj Finance, which was worth like almost as much as an Axis Bank. So I think that bipolarity in the market, I think that will sort of unravel itself. At least that's the view that I'm carrying.
But they say there is not much credit demand actually. That's why banks have not been lending, not because they were short of capital. You don't seem to be agree to that.
I don't believe in that at all. I think the fact of the matter is that one of the biggest plays in the Indian market for the next 5-10 years is the fact that the demand for credit is far more than supply for credit. I mean, think about it. All you have done so far, like if I just talk about the retail market, all you have done so far is that you've figured out how to lend to guys like us who got salaries, right? And we are talking about 50 million guys, right? There are another 300 million guys who don't have access to income tax records, and which is why you've seen all these lab products and people getting into self-employed categories and microfinance companies, you name it. I mean, you got demand for the products right from 10% IRR to 30% IRR, right? How can that exist in a market if you believe that you're constant for demand for credit? I don't believe in that.
The tricky question, Nirav, good morning and thanks for joining in.
Pleasure again.
Is what happens to the private sector's banking space, particularly because there the banks are split largely between corporate facing and having some stress versus the predominantly retail facing banks and not having stress at all and expensive valuations. Does that trade change a bit as well, or do you think the market will continue to prefer that, for the lack of a better word, quality?
So broadly, I think that the way I look at it is that extreme level of valuations are very apparent in the market, right? If something is trading at 8 times book, 10 times book, it's very apparent that, these are crazy valuations. Likewise, something is trading at below book and 0.5 times book, you can make a case that, it's extremely undervalued. You don't know the triggers which will unlock the stories in both the sides of the trade.
Sure.
A lot of the banks that you talked about are somewhere in between, right? So I think you need to approach on a bank by bank basis in terms of what are the growth rates. Just for the sake of argument, I don't think that you're going to get worried about what's going to happen to this broad sector of mid-cap private sector banks. I'm not worried about that. But if something is trading at 6 times book, 5 times book, 7 times book, I think because the growth differential will narrow, right?
Yes.
What has happened? What are the markets telling you? If PNB is up 50%, if State Bank of India is 30%, it tells you that you are forecasting higher growth, right? That means that the growth differential between PSU and the private sector banks will come down. So one-time reset in valuations can happen for sure.
I think this is also probably happening because until now, investors didn't have a choice. They couldn't go out and invest into PSU banks. Now at least there is a choice, and therefore that mean reversal could happen. There's so much of banking that we've spoken about, Nirav, today.
Right.
I want to move on to some of the other pockets as well. One thought that you've shared with us, and which is what I want to quiz you about. You don't like cement. Now, why would that be the case? One, the numbers reporting was good. The commentary wasn't bad from any of the players. If at all, they were cautious on costs, but not so much on demand. And if indeed Bharat Mala and some of the other things happen, if indeed housing happens, which seems to be the case, why would cement not be a space that you would like?
Perfect. So it is a very relevant question. For example, the work that you've done, it's amply clear that the leverage of cement to GDP is in the region of 1.3, 1.4 times. Cement demand cannot surprise you on the upside. It has not happened in China. When China was growing at 12%, cement demand was growing at about 15%, right? So I've got a very high comfort in terms of trying to assess that it is not that cement can go at 15% tomorrow. That is out of the way. Cement cycles are caused by shocks in supply, right? That is not happening right now. So our broad hypothesis is right now that your utilization levels are at about 68, 69 levels. Till the time you don't hit those 83, 84 levels, those boom in profit doesn't happen, right? So it's a timing call more than anything else. We think you're at least about 6 quarters away from those things to fall into the place. Okay. And then the valuations like consumer valuations, which is not where the commodity should be trading at, frankly.
So would you like to play this entire Bharatmala project? Is there a way which stocks could one probably pick up?
So I think the way to play this is through EPC companies, right? So I think you look at those companies which have got decent amount of operating cash flows, decent level of ROEs. You don't want to bet too much on turnaround companies. It's not a sector that is known for creating shareholder value, but I think there are pockets of excellence over there. And I suspect that again, it is a sector where ROEs can go up simply because the demand for the work is significantly going to be higher than the capacity which is there right now in that space. So broadly, 30,000 feet view, I like the sector, which is the EPC companies, those companies in the BOT space, hybrid annuity, stuff like that.
Okay. Just hold on to that thought, Nirav. Just need to cut in for a very quick bit to M&M Financial. They came out with a rather disappointing set of numbers. Let's hear out Ramesh Iyer for a brief
The first half for rural always has been historically for us an increasing NPA and pressure on collections. But I think that trend has been challenged in the last 2 quarters. We've seen improved collection efficiencies. We've seen declining NPA trends very clearly. Our AUM has grown at about 14% and now very, very close to 50,000 crores. And even the volumes have picked up just at the back of GST introduction. The whole system was getting adjusted to, and therefore July, August was a little slow for us, but September did catch up, and with the festival sentiments, the overall volumes did register a good growth. And we also have seen the collection efficiency improve and inching upward of 93, 94, 95% levels. And therefore our belief is that the overall sentiments have turned positive and we are the one to be benefited out of that. Very interesting and important, while we have shown a declining PAT at about 14% for us, but one should also look at that we have already moved to 90 days NPA already. While we could have waited till the March 18, that's where the time was, but we have already moved to 90 days and we have therefore taken in an additional provision of about 246 crores. But for that, we had actually had a profit growth of 157% over the previous year. The NIMs have also improved. The borrowing costs for us have come down. The lending rates have stabilized and the NIMs have shown improvement. The revenue have registered growth. So I think overall we would believe that from last about 18 months that we have had difficult times, or 2 years difficult time.
Well, that's M&M Financial's management talking about the quarterly numbers. We have discussed NBFC already in detail, but you know what I find interesting, what you have also mentioned, that the capital investment will probably start with a lag. Why is it so? I mean, you just mentioned that this, the PSU capitalization should be seen as a big booster to the economy, but still you don't expect the capital investment to really start.
So I think we do, what we are talking about essentially the sequencing of how the demand is going to pick up, right? So let's look at one of the biggest capital goods sector is power utilities. You got plant load factors in the region of about 62%, right? And if you got at 62%, then I don't think that any investment cycle can pick up, irrespective of how low interest rates are going to be, right? It's only when I see a prospective ROE in the investments, I'm going to have that cycle picking up. And there are other concerns around renewables and stuff like that on what is happening on the PLF. It's obviously depressing the PLF of the utility sectors. So I think you need to give time to the fact that that negative output gap in some of these sectors will take time to shrink. So maybe what we are saying is that that cycle is probably 18 months away. But I think, for example, what are we excited about? We are excited about the fact that where there is a big positive output gap, in a sense that no infrastructure, no roads, build more ports, stuff like that. That is where I think the next level of investment cycle is going to come. So you have to differentiate between the private corporate capex and the government induced capex, which is infrastructure capex. The second leg I think is going to come first. That eventually means that you will consume more steel, more aluminum, and then that eventually translates into a higher secondary demand for the utilities, eventually. So it's a question of sequencing in terms of where the demand is going to come first.
Okay. I'm looking at what you're positive on, Nirav. Spoken about BFSI, yes. Argue about four-wheelers. Aviation, that's an interesting pocket. It's not that the stocks are really trading at the nadars that they used to some years back. Is this the recent growth data numbers that is fueling this optimism?
There are two things to it. Obviously, the growth is also dependent upon the fact that you've got a very benign view of the oil prices. I'm not really worried about those episodic increases in oil going to $65, $70. We can't preempt that, right? But if you take a fundamental view in terms of how the shale oil is replacing the marginal cost of production and the swing producer for the global economy at large, then I think you've never seen a case in history where oil doesn't do anything for the next 5 or 8 or 10 years, and then suddenly you've got 20% growth rate in the aviation sector. Now think of it that on an installed base of about 450 odd planes, a 15 or 80% growth talks about that you need to add about 80 or 90 planes every year. Who is prepared for that, right? So we are talking about different levels of threshold in terms of the PLF for the aircraft, different levels of the profits. All of us are anchored by what has happened, right? A classic case is what Warren Buffett said, that you could have never made money investing in airlines, and he's put in $10 billion of his own money. The fact of the matter is that if you only look at the balance sheet of any of the large cap companies, Indigo, SpiceJet, free cash flow yield is about 9%, 8%, right? So if you just remove the name of the airline company, and if you look at the P&L and the cash flows, they are as good as any other FMCG company. You'll be surprised, but you don't need any capital to start an airline. You can virtually run with very, very minimal levels of capital, because that's a lease model.
So you like the entire space, or you like?
I like the entire space, but obviously we like SpiceJet more because the valuation gap significant as compared to Indigo, and it's going on the same path that Indigo is in terms of the deal with the Boeing, and therefore the sale and leaseback profit which kicks in next year. Valuation, I think, roughly 1/2 that of Indigo, with similar levels of profit. So fairly bullish on that space.
Just like PSU Banks, after a long time, so many years, people are expecting to see kind of re-rating in telecom as well. What's your view on that?
If it's not happened already.
We are not very bullish on telecom. Frankly, I'm slightly confused in terms of what Reliance is doing, right? You need to be mindful of the fact that market is rewarding disruptive guys in a different fashion, right? If you got a model like an Uber or a Netflix, you're allowed to blow billions of dollars every year, assuming that at some point of time, my eventual free cash flows will pay back for what I'm burning right now, right? You got a similar kind of vision coming from Reliance in the telecom space, right? And therefore, I believe that there is a case that Reliance is going to be a big disruptor. You cannot value the telecom business in similar fashion when you look at the other telecom companies. Why we don't like the space is simply because of the fact that you cannot have one guy controlling 60% of capital employed and 10% of market share. That has to align. I don't think Reliance is going to come and say that I've got a 12% market share, now let us try and take the industry profits up. That's not going to happen. I'm almost willing to take a bet on that. I think we are far away from that equilibrium situation.
That's well put. And okay, fine. I agree with that argument as well. One last question, really, at least from my end. All marketing companies, that's the interesting pocket. They've moved up quite a bit. Is this view again based on the fact that you don't think that crude oil will have substantially high levels, and therefore these companies will continue to do well?
Indeed. So I think that obviously if oil goes to $100, a lot of the bets are off, right? Be it for aviation, be it for oil marketing companies, because in any government you cannot have a similar kind of price reset happening, because there are secondary effects to the economy as well. Outside that, I think combination of both. The fact that we've got a benign view of oil prices. Secondly, also the fact that if you look at the economics of only the marketing business of oil companies, very, very highly ROE attractive. It's just that, they seem to get lost because you get one broad figures, which is consolidated numbers for refining, for piping, and for OMC companies. I would argue that, for example, if you make a case that you can spin out the oil marketing companies, they could be worth twice as much they are trading right now, because same thing, you got a decent view on a growth in free cash flows for a long period of time. And let's be very clear, the competitive advantage that these companies own today as compared to private refiners in the last cycle is fairly different, because they have a lot of flexibility in terms of their pricing.
Yeah, that's true. Okay. Nirav, we'll leave it at that. But thanks so much for taking the time out and joining us today, and look forward to having you more often on this forum.
Thank you so much. A pleasure being here.
Yeah, thank you. Okay, the markets too. Flattish, nothing quite disruptive either in the Bank Nifty or the Nifty as well. We'll slip into a very, very quick break, but we'll continue discussing banks. On the other side, the 2 lakh crore PSU Bank recapitalization. We speak with industry expert A.K. Purwar and R.K. Thakkar of UCO Bank. Stay tuned.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Watch us live in conversation with Ramdev Agrawal on the power of quality.
Quality of business and quality of management, because that's the 90%, 95% of the investing. Quality is the starting point. If you don't have quality, it's not taking up the journey at all.
Watch us live in conversation with Ramdev Agrawal on 31st October at 11 a.m. as we discuss the power of quality in the process of investing. Send in your queries using the hashtag AskBQ to BloombergQuint.com. Write to us now. Use the word Ramdev in all your queries.
Welcome back. You're watching Indian Open. The big conversation remains around the banking space. We now have the news and the analysis, the initial analysis of the 2.11 lakh crore being pumped into banks. I think the question now has moved to how do you ensure that this capital is well utilized and well sort of divided within various segments of the banking sector. Joining us to speak about the macro picture, but also giving us an on-the-ground impact, will be two veterans on the space. A.K. Purwar, former chairman of State Bank of India, a long-time banking sector veteran, and Mr. Thakkar of UCO Bank is joining us to give us a more, closer sense of what bank managements are thinking. I'm just going to come to you, Mr. Purwar. I think, long-standing request from the sector that we need capital, we need capital. Well, I think this time not only has the government given that capital, they've given it in a substantial quantum.
Well, I think the way in which the banking sector was today, because of huge amount of NPAs, a lot of risk capital was required to give a push to the cushion to the banking system and allow them to start lending again. It was a much needed and very welcome step. What it does is that it provides now to the banking system an amount of money which is a risk capital. That risk capital will provide them cushions against losses which they might incur. As you are aware that NPAs, the problem of NPAs today is huge in the public sector side. And provisioning requirement of these, thanks to the recent RBI guidelines, thanks to NCLT coming in, are huge. And therefore, there was a substantial erosion of existing capital in the system. Thanks to this amount of capital, now banks will get revitalized. Banks will have the appetite to take risks. banks will be able to lend actively. It provides a lot to the system.
I'm just going to go to Mr. Thakkar for a minute. Mr. Thakkar, good morning. Thanks for taking the time to speak to us, sir. Sir, I wanted to understand from you whether you've heard anything additional from the government in terms of, how this capital allocation will take place. How soon will you get the first tranche of capital? What is your understanding, sir?
No, we haven't yet received any communication regarding the total modus operandi and how much amount would be released instantly or in the current financial year. I think we are waiting for the instructions. But we are hopeful perhaps by the end of this quarter, we might get the first tranche. So that should help us meet our capital adequacy requirements. But the exact amount and when, I think we have to wait for the further instructions.
Mr. Thakkar, at your bank, what did you, sort of peg the capital requirement as for both this fiscal and for next fiscal? What is your internal estimate that you would need?
Initially, before this fresh cases which have to be referred to NCLT in December, our capital requirement for this current financial year was around 3,000 crores. And now with this additional requirement of the new account which have been referred to NCLT, which was not taken into account previously, another 500 to 600 crore would be required. So total requirement for this current year would be around 3,600 crore, and almost the similar amount is required for next financial year.
Okay, so you yourself, one individual bank would require about 7,200 odd crore, and this is based on credit growth estimates of what, say 5 to 6% or higher than that?
No, we have having projected a conservative credit growth of around between 5 to 6% only.
5 to 6% only.
Yeah.
Okay, so just one last question again, trying to understand from you all whether how these recapitalization bonds may work, how they would get classified. Any insights you can give us into that, sir, even if it's not sort of understanding from the government, but understanding within the industry?
See, it would again, I think the FM had announced yesterday they would be issuing instructions. In what mode these bonds would be issued is not very clear. But there can be basically two modes. Either the government gives a capital and that they also simultaneously issue the bonds which the bank can subscribe. Later on, these can also be offloaded in the market. Or secondly, another way is through a sovereign guarantee the bonds are issued to capitalize. Now, which modus operandi or some other new method would be there? I don't know. We'll have to wait and for the instruction once we get from the government.
All right, Mr. Thakkar, thank you so much for joining us with that quick view. That's, on the banking sector, immediate sort of issues. But coming back to Mr. Purwar. Mr. Purwar, I think, the next debate is how do you ensure this 2.11 lakh crore is, not sort of thrown to the winds again. So it's important for them to come out very shortly with some sort of reform agenda.
The amount is a very decent, good amount, and it provides huge amount of working capital to the system. But having said that, this is the opportunity for the government and for the system to consolidate. The country doesn't require such a large number of public sector banks. It requires maybe 4, 5, 6, depends upon. So there has to be large public sector banks. There have to be big bank, mega banks which can compete with the state bank, compete domestically and complement them globally. So this is an opportunity for the government and for the system to restructure itself. And unless and until the system gets restructured, my worry is that the execution of this might throw its own challenges. It's a huge amount which has gone from the system, and therefore it is incumbent on the system and the government to ensure that this gets properly utilized, gives optimum benefit to the economy, spurs the growth, and addresses lots of capital adequacy issues which the banking system has. So government has to work out some plan of restructuring the public sector banking system. This is a very big opportunity, and I'm sure government must be thinking about it.
Mr. Purwar, if I may ask you a question, we don't know exactly which public sector banks are going to get money and how much, right, from this allocation of 2.11 lakh crore. But it does seem from comments made both from the chief economic advisor and otherwise, that they might direct this money towards the stronger banks, the banks that have already done the cleaning up and therefore will be in some ways ready to sort of restart the credit cycle. So, would that be the way you think forward? So let the weak banks in some ways continue to suffer over time, let for the organic weeding out of banks to happen, because consolidation otherwise will have to be forced by the government. Will banks find the appetite to take on weak banks? How do you think this will play out or should play out?
You know, an ideal way is that, well, the market forces, let the market forces decide and let weak banks be taken over by large banks. But you know, I have been in the system for almost 50 years. I have seen domestically what has happened in the banking, and globally also I have been a part of. It is better that the regulators address this issue and see to it that, well, weaker banks are taken over by larger banks. First thing we must remember, under no circumstances depositors should suffer, whether the depositors are of smaller banks or larger banks. So that basic issue is not negotiable. On that, no compromise is possible. Subject to that, I think it's time that some large banks who have succeeded in cleaning up their books, I'm happy to find some, they must take over some of the weak banks. I would go to the extent further, although I am a state banker, that even the State Bank of India should be encouraged. And this is the time they should also take over some of the banks and help the industry in sort of cleaning up its systems. But yes, restructuring must. Depositors' interest protection must. But simultaneously, some of the things which are not viable, not sustainable, there has to be a creative destruction there.
But creative destruction is something that we've never allowed for in this economy. I mean, if I may argue the point, sir, that a 2.11 lakh crore rupee capital infusion might also be termed as a bailout of sorts. Some might argue. Some might also argue that it comes with, you know, the encouragement of a moral hazard of sorts, because you're telling the banks, I've got your back. You know, every time you sort of indulge in imprudent lending of sorts and then you fall into trouble, then where is the creative destruction possible? So in our history, have we ever allowed for creative destruction to play out, especially in the public sector banking space? Is it ever going to happen in the future?
No, I think for everything time comes. Let's look at the public sector banking system. Some of them have stood their grounds, and I'm very happy to see my own bank standing its ground. But having said, there are some other banks also who have stood well. Now, if you allow these banks to take over some of the non-performers, so to say, and these banks get taken over on market systems basis, valuations, and all those things, I'm sure that this itself will be, I would say, a sort of a destruction. Look at it this way. Today we are almost having 30 public sector banks operating in different spaces. Some of them have become extremely weak. It's better that they don't exist. It's better that they are taken over. But it is also should be ensured that depositors are not allowed to be suffered. RBI, thanks to RBI as a regulator, never ever a depositor has lost money in the Indian banking system. That must continue. And globally it is done. Not that we are doing something new. We are not giving just bailout funds. This restructuring happens globally whenever the time is required, whenever there is a requirement for that. I need not give examples. In US it has happened. One of the citadels of the capitalism, it has happened, bailout has happened. So it's required, necessary. But creative destruction means some of the undesirable institutions which have followed not very desirable practices, institutions which have not followed proper credit appraisal systems and processes, but institutions where things have gone wrong, they have no business to exist in today's system.
Mr.
I had a specific question. So, apart from this macro consolidation restructuring and hopefully at some point even a discussion around privatization, the operational restructuring, so actually on the same day that the recapitalization plan was announced, the Bank Board Bureau suggested that you need to segregate the supervisory and the management related functions of the bank boards. I think it was an important suggestion, sir, because not just in the public sector, even in the private sector, the oversight of the boards is completely non-existent. They have not been able to act as a check and balance at all. Do you think that aspect needs to be looked at, sir?
Definitely. I am sure that that aspect would be looked into. The point is that, well, the public sector banking system, unfortunately, have become no one's baby sometimes. Everyone takes them for a big ride. Why it has happened? Because of the reasons all of us know. Having said, we have to bring about a change. We must ensure that supervisory and operational functions get segregated. Supervisory board gets substantially strengthened. And 3, that the size of the bank should be such that the chairman of that institution can command its respect on its own, as the SBI chairman commands.
I just had one question, Mr. Purwar, and that is on when do you think all of these moves result in credit growth, if not normalcy, but much better than what the banks have shown in the past starting to happen? Would it take a couple of quarters, or do you reckon it'll be sooner rather than later?
Well, I would put it this way, that credit demand has a lot of other aspects.
Yes.
Aspects means that there has to be a growth in private sector, there has to be a capital investment in private sector, there has to be projects in private sector.
Well, let's assume that Bharatmala and a lot of other things and housing, etc., will find its demand.
Well, I would put it this way, Bharatmala and all these, let this be assessed by the banking system on its individual viability and the merits.
Sure.
If those projects are viable, they have merit, definitely they need to be supported. But if you're talking of pure private sector, that drives the growth. Real growth is driven there. Bharatmala will generate lot of opportunities of investment in private sector. How that evolves, how those projects are set up by the people, what kind of viability is there, what kind of profitability is there, what kind of security they are able to offer. So banking system has to assess these projects strictly on merits. Unless and until that aspect starts reviving, I'm afraid that the credit growth will continue to be in single digit.
Mr. Purwar, what do you make of this push towards increased lending to the small and medium enterprises? There are 2 aspects to it, or 2 schools of thought. One is that look how large credit played out for you. Large corporations did not prove to be of higher credit quality. So let's give credit where the credit actually needs to go. But then the flip side is that let banks make that decision. Why is the government once again pushing banks in one direction or the other?
You see, first of all, we must try to understand what could be the compulsions of the government to push MSME. MSME means that it creates huge employment. A lot of first-generation entrepreneurs come into the picture. Some smaller organizations who are efficient and allowed to grow. That happens. Large sector doesn't offer that kind of advantages. Having said that, let the banking system decide and take onus and responsibility for funding the projects which they are comfortable with. It must not happen like a direct lending.
Absolutely. Mr. Purwar, thank you so much. It was a pleasure having you here to get your perspective and your thoughts on this banking story playing out.
Thank you very much. Thank you.
Thanks very much, sir. It's what we continue our focus on banks this morning. It's been a good second quarter for RBL Bank, with its bottom line growing by more than 60%. What's also reassuring is its stable asset quality. Vishwanath Nair caught up with the bank's managing director and CEO Vishwaveer Ahuja and started off by asking him what led to that sharp rise in profit. Listen in.
It was a combination of good growth across all business segments, improvement in margins. I think margins in a sense improved more than we had perhaps planned or anticipated. And at the same time, the asset quality holding up well. It was quite stable. In fact, both the gross and NPA percentages came down. So credit costs actually came down. So it's a combination of the basic math here that worked in favor. And I think even though we are investing across the platform, we are investing in infrastructure, people, technology, and so on and so forth. But I think we were able to manage the expense growth also, such that the flow through to profits was significant. Yes.
All right. Mr. Ahuja, you mentioned the margin number. Now, that has seen a significant jump. What contributed to this? Was it the low cost? What is it?
So, first of all, the proportion of our retail or non-wholesale loans is gradually increasing. And those loans are at much better yields. Yeah. So, so even though on the wholesale side, there is significant competitive pressures on pricing in particular, and those yields have come off. But I think just because of the mix change, we've been able to hold those margins well in terms of the overall situation. In addition, we've been able to bring down our cost of funds. Yeah. And I think the reduction in our rates and therefore in the cost of deposits was pretty significant this quarter. And actually, if you see over a 1 year perspective, we brought it down 70 basis points, just the cost. And in terms of just the quarter, we brought it down 30 basis points. So on a net basis, we could actually achieve a 20 basis point improvement in net interest margin, just sequential quarter basis. So I think that is what has worked.
Most of this reduction in cost is because of the cost of funds, or are there other costs involved which have come down significantly?
No, so like I said, I mean, first the yield on the asset side, we managed to get a better overall net interest margin because of the mix of businesses. And then the rest of the effect has come in managing the cost side. Yeah. And in combination, this is there. And basically, these are the two main components. And from the cost side, I think CASA growth was significant. Yeah, it's 56% or whatever, you know. And again, the higher the CASA, the overall cost of deposits sort of comes down a little bit, and that helps.
What is the ratio like on the CASA front?
23.7%. Right. It's been the percentage and proportion has been growing steadily.
Fair enough. Now, just moving to the asset side. Now, this quarter, you also saw a significant jump in the advances growth. What contributed to this? Specific segments that you were betting on probably paid off?
So actually, this quarter, fortunately, all segments grew well. So we had significant, close to 37-38% growth on the overall book. Wholesale grew, non-wholesale businesses grew. So corporate, commercial, mid-market, agri, micro banking, and retail lending. You know, LAP, business loans, small business loans, card portfolio, all of that grew. So, you know, it was actually across the board.
All right, that's RBL Bank. Good set of numbers there. Before we wrap up, here's a quick programming note, though. Catch a special interview with Microsoft Satya Nadella. That will be playing out through the day on Bloomberg Quint. That's BQ Live, BloombergQuint.com, and all our social platforms. He's in conversation with Carlyle Group's David Rubenstein on The Rubenstein Show. We'll get you a lot more from this interesting conversation on our shows through the day on BQ Live, so stay tuned.
With that, it's a wrap on this leg of Indian Open on a note that the markets are very, very flat. But F&O show will take forward the action. It's an important expiry day. So all the action coming up. Stay tuned to Bloomberg Quint.